Hello everyone, welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in. This video is being recorded on the afternoon of February 28th, 2025. It's the end of the week, but also the end of the month, so new monthly charts. And it's something we talked about, hinted at the past couple weeks or so. The precious metals could be due for a pause or a correction. After today, it's pretty clear to me it looks like an interim peak in gold and silver and the miners is in place. Now we are in correction mode. So let's get to the video and let's take a look at the charts and consider the potential support levels for precious metals over the coming days and weeks. So starting off, as always, we have the daily candles for gold here, daily candles for silver, gold-silver ratio line chart. And this did pop above 90 briefly. It's come back. I don't consider that a false breakout. When you are in a correction in precious metals, the strong tendency is for gold to outperform silver. And so, again, this is a bullish pattern here. You go back a couple years, gold-silver ratio, beyond this chart, the gold-silver ratio has been in a range, and 90 has been resistance on that range. So there is potential for this ratio to pop above 90 and not just to 93, 94. This could pop to 100, maybe 105. But that's what we need to know. And before we think about various price targets, we should assess, as far as the gold-silver ratio, we should assess the markets individually and in real terms. So looking at gold here, we mentioned this clear support here at, I believe, 28.90. So that was broken to the downside. So you can see these candles. So there is heavy selling here. And so the next support level you have just above this gap here, which I think is 27.90. So you have that. Then you have this clear support here, a range where you could call it 27.60 down to 27.20 or 27.30 or so. So this is good support for gold. The moving averages, this is the 150-day. This is the 200-day. And something I've talked a little bit about on Twitter, I mentioned like months and months ago, and I'll do another video on this, or I'll write an editorial, but after gold breaks out, there's been 3 times historically, it breaks to a new all-time high, makes a big run, then it comes back and tests the 200-day moving average. Or one of those times it came within 2% of that in 2009. So basically 3 times, breakout to new highs, new all-time highs, big run. Then it comes back and tests the 200-day moving average. After that point, that's when gold and silver really go crazy historically. So if we see gold come down here and test the 200-day at some point in the next couple of months, it tests it successfully, and the other conditions are in place, that could really be your last best buying opportunity before precious metals really, really take off for good. So I just want to include that in there with the short-term bearishness. So that's what we're looking at with gold. Again, 200-day here. We'll hit 2,600 next week. And those 3 corrections were, I think, about 13, 14%. Now, that doesn't mean that this gold correction has to be 14% or 13%. It did not move up as much as the others, or 2 of the other 3. Gold was much less in percentage terms. But nevertheless, we'll see. But that's my view. I do think gold will test the 200-day moving average at some point in the next few months. And again, we're in a correction. So silver is going to underperform gold. This was disappointing here that it couldn't make a last push up to 35. So this is a lower high, while gold made this higher high. So that's not a good divergence. That's a negative divergence. So various support levels right here at 30 on the daily, 29 is significant support. We'll look more at the weekly charts and the monthly as well. So here are the weekly charts. And again, this is the first significant weekly support, 27.20. Again, this is the equivalent to the 200-day moving average. So again, you have this range here, 27.20, even potentially down here into the low mid 2600s. So that's a potential support range for gold. Maybe it could go below the 200-day for a little while. So don't want to rule that out completely. Silver weekly here, just a nasty candle. Look, the last 3 weeks, we mentioned it. You had 3 weeks where there was selling on strength. 3 consecutive weeks where silver was up, but it was giving back gains into the weekend. Boom, nasty candle to the downside, closed at 31.50. Really strong support at 26. Here's my lovely 400-day moving average, the weekly equivalent here. So that's all the way at 27.58 now. And now it looks to me like this could come down and test this at some point over the coming weeks. 29.28, I mean, that's definitely good support here on the weekly. Look at the weekly line chart. I mean, this is beautiful. Strong support here right around 28. We can see here it did have the breakout here, but it's not holding. It's going back below. That's not good. But look where we are. 400-day moving average. Again, almost at 28. Strong support here going back 4+ years. And that's where we are. 31.50 in silver. Really, really strong support here around 28. And we'll get to the monthly. And I think the monthly, I mean, this is important. 29 right here. This is the monthly support. So, I mean, this thumbnail here, unfortunately, you can't draw lines on these thumbnails. But we can see here, there are quite a few times when on the monthly chart here, silver traded below 29. I mean, look at these months here. It went below 29, but it never closed below 29. Even December, January. I mean, December, a nasty month. Big January. Now a bearish reversal. So the monthly has showed 29 as strong support. But look at how many times in the monthly chart silver has traded inside of a month above 32.5, above 33. Look at all these tick marks. And it hasn't been able to close here at 33 or above 33. So that's really disappointing. So you have put in strong support, 29, but now there's really strong resistance here at 33. So we'll see. Realistic worst case, I would say, is you break 29, then you put in a real significant bottom here at or above 26. So the monthly chart for gold, it's clear. This is the support right here in the low to mid 2600s. That's the monthly support. I should have run a Fibonacci using this move or this move right here. So what would a 50% correction, 1600 to 2900, that would 50% of that is probably too much. I mean, that's a big move. But what would 50% of here in the 1800s up to 2900? So a 50%, maybe that gets you to 23 or 2400. So look, I'm not saying gold's going to correct down to that point, but we got to keep all these things in play. I mean, my gut is this would be the correction here. This could be the bottom, this support here. And looking at the daily and the weekly, there's also really strong support in the 2700s. So we got to keep all these levels in mind. And speaking of keeping things in mind, don't forget gold against the 60-40 portfolio, gold against the S&P 500. So these charts are updated. Today's at the end of the month. And I did a tweet. I showed a chart a couple days ago where this looked like it was really breaking out. I apologize. I should have put in the thumbnail here because this is hard to see. But it looked like gold against the 60-40 as of 2 or 3 days ago was really breaking out this month. But what happened? Big rebound in bonds and a big sell-off in gold to end the week. So, you know, this hasn't broken out yet. I mean, it's really close to breaking out of this 10-year range, but it hasn't happened yet. Same thing as far as gold against the S&P 500 4-year base here. Hasn't broken out yet. So with respect to that future big move after this correction, what you need to see is you need to see a fundamental shift. And perhaps that's the economy's rolling over, recession is coming, Fed has to cut rates, maybe cut rates aggressively. And when that happens, you can see this baby finally break out, start to move like that. And same thing with this. These things break out. Gold puts in a bottom at the 200-day moving average or a little bit below. Then it rebounds. Silver follows. Then you're starting the move where things are really going to run away. The move that will lead to 4,000 gold and even higher. But we can't just go by the charts alone. You also have to look at the macro fundamentals and ratio charts like these. So the potential setup after this correction is really, really bullish for precious metals. But We need a recession. We need Fed rate cuts, because that shifts money out of conventional assets like stocks and into gold and precious metals. That is what is needed to have that huge move where everything precious metals, gold and silver, juniors, exploration stocks moves up. So we'll keep abreast of this over the coming weeks and months. And I hope you will keep abreast of the Daily Gold Premium, our premium service. You can sign up for this at thedailygold.com/premium. It's highly affordable. We are looking for the best junior companies that have 5x to 10x potential in a cyclical bull market. So we are assessing fundamental quality plus their upside potential. And for these types of companies, this correction out, that's going to be your last chance before you buy these companies, before they really run away and they get a little too expensive. So that's why it's so significant. If you're not a subscriber and you own juniors and minors, why you should seriously consider subscribing now. Because again, these next few months, this could be the last chance to buy high quality with big upside cheap. And look, not to toot my own horn, people, but in the last 2 or 3 weeks, I've had a hold pretty much on every stock. And I've told people 2 weeks ago, these stocks have made huge gains. We got to hold off. They're going to correct. You're going to have to wait. I know it's tough. You see the big moves. You see the upside over the next couple of years. You want to run in and buy, but sometimes you got to wait and you got to let prices come down. So if you are a subscriber, thank you so much for your business. Really appreciate you. For those that are not, hope you'll give us a chance at some point. And that aside, let's get to the stocks. And so here are the weekly charts: GDX, GDXJ, and SILJ. I'll start with SILJ. I mean, this is the 400-day moving average equivalent. It looks like this is going to bust and go below it. So that's not good. Look, the silver juniors, outside of a couple really good ones, they've really been lagging and performing poorly. It's not their time yet. GDX, GDXJ, they did have 2 candles at resistance. Look at this week. That's an ugly candle, ugly candle. So they ran into resistance 2-3 weeks ago. Couldn't break out. Now they're selling off. And this is the 400-day moving average equivalent. So I don't know if these are going to come down and test this. Maybe not. Maybe they'll bottom at the 200-day. But this just gives you an idea. Look, if this is a significant correction, this is a moving average that could be tested. These could be tested at some point. I don't have the breadth indicators updated yet, but look, that's another reason you should think about subscribing, because I don't just look at these charts. I'm looking at breadth indicators, sentiment. You have to look at all those things: price action, relative strength, to try and gauge when is a good time to enter the sector and when is not a good time, like 2 or 3 weeks ago. So continued correction in the minors, but if we look at the daily charts here, not quite a bullish hammer. These are bar charts. I looked at the candles. Look, this is a bullish candle or a bullish bar, but it's not a hammer reversal. So I would have liked to see a hammer reversal, but nevertheless, we had this hard selling here across the sector. So you do have a recovery today. It's really interesting. Gold and silver were down big today, but look, the miners were up and pretty good candles. What does that tell you? At turning points, the miners can lead. So we could see our potential rebound or sideways action in the metals next week. But yeah, here and now, nice rebound in the miners, but I wouldn't chase this. I really would like to see miners come down. I mean, first, let's get GDX coming down, filling this gap here and testing the 200-day. Same thing with GDXJ. So they could rally a little bit, pause for a couple days, but I think these will come back down and test the 200-day moving averages. Alrighty. That's it for this week. A lot to get in one video, a lot happening. End of the month, a lot of charts have to be updated. Look, rough week for precious metals, but they had to correct. This is necessary. Who knows how long it'll last? Look, we're in a bull market. It's nothing to worry about. If you have cash, just wait. Use the weakness to buy best of breed companies that have big potential over the next couple of years. Because people, after this correction, look, this could be your last chance to buy high quality, really, really cheap. So that's it for me. Hope you had a good week. Hope you have an even better weekend. Let me know what you think of the video. Love to see your comments as always. Thanks for tuning in. Thanks for your support, and I'll talk to you guys again next week.